research economist.
Hello, everyone. Mike Arnold here, co-founder of Path Trading Partners, along with the soon-to-be-on, not to miss the Fed Day, Bob Iacchino. Why you all tuned in to hear his scintillating thoughts on the Fed press conference. Hope everyone had a wonderful day. Oh, wow, what happened there? Hold on. Minor glitch. Hello, George. Hey, Waka Waka. What do you mean no rally? There was a huge rally. And no, it was not an all-time high. Facebook had a bad, Qualcomm bad, Amazon. Well, Amazon and Apple haven't announced. They announced tomorrow. Don't get ahead. Waka Waka, Mr. Bearish Waka Waka. Davey, good afternoon. We'll see if there's going to be a massive rug pull. Remember the last few Fed meetings, big rallies on the Fed day, and the last couple pretty substantial reversals the day after. But I talked about this morning, if they started stressing data dependent, watch for that rally, and we got it. Hey, guys. Hey, AP Worlds. Uh, Two banks think it's going to be a positive GDP. I do not think it's going to be a positive GDP print tomorrow. Hey, everything green. Hey, Patrick. Powell being fitted for pink sunglasses. Let's see. Let's just get, then we'll get back to some comments. Hey, Ted. Hey, Anissa. Hello, Lauren. Hey, Ken. Welcome. Hey, Lauren saying hi to Ken. Well, because Ken hasn't been here in a couple days, but Ken is back. Hey, Connor. Sir, how's the crypto chart? We'll take a look at cryptos once we're done at Bob. We'll get Bob's take on it. I have my own take. We'll get Bob's take. I have not spoken to him yet about it. Lots of people calling the bottoms in. I heard that all day today, or all afternoon. Hello, Wavy. Powell practically grabbed me by my screen and said bye. Probably means tomorrow's numbers are crap. Hey, Options 22. With that, please bring back Paul Volcker from Rich. All right. Real quick, if you are new here and you want to continue to hear what Bob says, please continue subscribing so you know when we go live. Hit that like button and ring that bell. Every other long-term subscriber, you know what to do already. With that, I'm hitting the magic Bob button. The magic Bob button. There we go.
Continue to hear what Bob says. I like that.
Yeah, well, where's your no brick wall? No brick wall today.
Back in my original room.
Does the room actually change, or does the room change, or does the wall change?
The room changes.
Really?
Yeah, the wall, well, we all know it's not really a wall, but the wall is in a permanent spot. But today the cleaning crew showed up here, so I had to move while they were cleaning the wall.
Cleaning the graffiti off the wall, huh?
Graffiti on the wall. So.
Big green day. What do you have to say, Bob?
Well, I mean, obviously, the thing that struck me was the Nasdaq more than anything. It's the largest move in the Nasdaq since, I think, from yesterday's settlement to high, it was the largest move since about, I believe, April 20th of 2020, April 6th of 2020. And then on a closing basis, largest move since November 4th of 2020. Interesting to me, I've got one quote I want to read you guys. You all remember the name Bill Dudley? William Dudley?
I do.
He's former Fed governor.
Yep.
I think he was he vice chair for a while? He might have been even been vice chair for a little bit. They asked him if they brought up the thing that everybody in here is bringing up, that the last two Fed meetings, it was a rally the day of and then a sell-off the next day. And they asked him if he thought, by the way, that's the kind of thing that people go, every time the Fed tightens, we sell off the next day, because it happened twice in about, I don't know, I think there's been 600 Fed meetings in history. But Bill Dudley, when they asked him if he thought this was going to be the same situation, he goes, wow, this rally feels like the hope of victory over experience. I thought that was really telltale. The hope of victory over experience. So what does he mean by that? Well, Jerome Powell seemed to be stating, I don't want to say he was claiming victory over inflation. He did say that the labor market is too tight and inflation is much too high. But he said another large increase may be appropriate in September. But he said they were going to be data dependent, and the data has been really weak. And this is what, like, I got all wound up when I heard that. I'm like, oh, now you're data dependent. Manufacturing ISM peaked last February of 2021. If you pull up manufacturing ISM, it's this. It's straight down since February of 2021. If you look at services ISM, angled down since March of 2021. So we're starting to see some weakness. Starting to see some economic weakness. We've been seeing economic weakness for about 14, 15 months, depending on what metric you. It's a matter of strength. So the data dependent part, as Mike mentioned, very critical, because that means if the data weakens, he'll pause, or at least start taking away these large rate hikes. And that's what this rally is. But I suspect that tomorrow's GDP could spin us right around like a top. I mean, it could very easily do that. He seemed to think we weren't in a recession now. That's fine. Like, that was a big thing for a lot of people on Twitter and on the news. You know, Powell doesn't think we're in a recession. Of course, MSNBC tweeted that as the main thing of the press conference. I said this on TD Ameritrade this morning. I haven't tweeted it out yet. I'm about to. The video, you guys can watch it. What I said to you guys yesterday in the live stream is still what I think. Who cares? I would argue that stagflation is worse than a recession. We could have stagnant economic growth, low unemployment, and inflation that settles in, and that's way worse than a recession. The last thing I would point out, and this was really weird, although he wasn't saying anything that was untrue, but he said in the press conference that it's been a long time since the Federal Reserve has preferred PCE over CPI. And he also said that the normal spread with PCE has been about, from CPI to PCE, has been about 25 basis points. Do you guys know what that is right now? And that's also the thing that made me want to look to buy things. Do you guys have any idea what the spread is right now? Because we all talk about PCI. The last PCI reading was 6.3. CPI was 9.1. So by Jerome Powell's account, he's halfway there already, back down to 2%, if they're going to be looking at PCE. So that takes away some of the aggressiveness. We don't have to see CPI drop so much. We have to see PCE drop. And we kind of knew this, but most people talk about CPI as the number that has to be at 2%. Jerome Powell, I think, clarified that no, as long as PCE is closer to 2%, we're okay. So kind of like pick the lower one, and that's the one they're going to go off of. And then the last thing he said, CPI, we think PCE measures things that affect the average individual a little bit too much. CPI relies too much on gas, energy, food, and housing. Well, what does the average person care about? Like, what are the things that he says that affect the average person if it's not energy, food, and housing? No one questioned him on that. CPI relies way too much on energy, food, and housing. We think PCE is a better measure of what affects regular people. I don't know what to make of that.
I make of it, they're so out of touch in their little bubble spreadsheet world. As we put up the graph yesterday, which shows the odds of a recession, it's either below 10% or at 100%, and you're in a recession. That's the world they live in. It's literally, and the stuff I've been hearing, yeah, the lows are in, and even if they're, this is all the feedback I'm getting. You got to buy everything. We got too much cash sitting around, and even if we're slightly wrong on the timing, the Fed's going to pivot earlier than we think, and so the valuations now aren't going to get any better. Even though they're not fantastic, even if we go into an earnings compression, you might as well just buy it now, and we can withstand a little drawdown if our timing is not exactly correct, because the Fed is not serious about anything.
No, they're not going to be able to get inflation under control.
I
People are
know.
still going to reference CPI because CPI, as Jerome Powell said, it depends on the things that affect people the most. By the way, if you guys don't follow Steph Pomboy on Twitter, Steph Pomboy, her Twitter handle is, where is it? SPOMBOY. Okay. She is head of something called macromavens.com. Super smart economist, really good pedigree. She tweeted something I really liked today that I took note of as well right after the meeting. She said, by the time employment is slackening to the degree the Fed wants, we will be in 2008 all over again. By the way, she's agreed to be a guest on the Futures Edge podcast. So you'll be seeing her on the podcast probably sometime in September. So anyway, that's my take on it. They're so out of touch to the average person. And I think what bothers me the most is not, by the way, they're going to start pulling back on the communications. That's the other thing. Another thing William Dudley said, remember, he was at the Fed when this happened. Okay. Dudley said the ample communication and the very clear communication from the Fed was the Fed trying to convince the market that they were going to stay at zero for a long time and that they were willing to go negative. That was the purpose of the frequent communications. The Fed's going to pull back from that. Now, it's what William Dudley said, and then Powell said it as well. He said he doesn't think it was very useful anymore. So they convinced the market, they needed to convince the market they were going to stay at zero so that assets would stay with a floor underneath them. And now that they don't need to do that anymore, the communications are going to start to dry up.
Well, what about when he said in 6 to 12 months, we have no idea where things will be? I mean, literally, how can you micromanage rates if you literally are saying in 6 to 12 months, we have no idea?
Yeah, I mean, if you're saying that you don't even know, like you don't even have an opinion
Yeah.
on what it is. You literally don't even have an opinion.
That's what's terrifying. You're hearing people try to micromanage stuff nearly month to month, and they don't have a 6 to 12 month outlook, even a 6-month outlook.
Right.
So, but yet, again, I guess that's why they thought inflation was transitory so long, because they don't have an outlook.
Yep.
But now everything's hinging on. Can we just dissolve them?
I wish, man. I wish.
This is absolute insanity. And again, it's buy everything. The buy programs that went off today, it was like still in low liquidity. The buy programs that are just like scooping up everything.
By the way, for anybody who wonders if Bitcoin is correlated to the Nasdaq still, I mean, come on.
Yeah, look at it's even a bigger 7. Look at the jump. All right, now people are going to argue with me with that, but Bitcoin is now a complete risk asset due to all the unraveling. Look at Coinbase today, which they're in major crap. Okay.
Yeah.
But that was up 11%. You got Tesla up over 6%. It was rushed to buy everything that wasn't nailed down. Bitcoin over 7%, which it said this morning if the Nasdaq goes, Bitcoin will go with the Nasdaq. But it even went more than the Nasdaq. We're still in buy. It doesn't matter because this is why I'll stand by from a psychological standpoint. The lows aren't in because it's still buy everything. The worst is over. So, but that press that just drove me up a tree. I mean, this Fed does not know its ass from a hot rock.
So here's the other thing. I'm just reading this now. States with booming budgets are sending inflation relief checks to family to ease the worsening pain from rising prices.
How do you fix inflation? Create more inflation.
Again, you can't fight the Fed. I mean, part of the excess budget of the booming budgets in some of these states are the stimulus programs during the pandemic where money was sent to these states. to help manage the pandemic. And then checks were sent to people to help ease the pain of the government force closing all these businesses. And now the states are sending inflation relief checks off of the money they got for pandemic relief. I mean, it's fucking nuts. DeSantis here in Florida did it too, but he cut it to the poorest 1/3 of the Floridians. So he means tested it, and he's sending checks only to the poorest 33.3% of the Floridians. Everybody else doesn't get anything. I get nothing, which is fine. And by the way, last thing, and then if there's any questions for me, otherwise, Mike, I'll leave you to do your work. Can you trust a group of people who thought inflation was going to be transitory as to whether we're currently in inflation or not? I'm sorry, in a recession or not? You trust that?
Again, I don't trust somebody who doesn't have a 6-month outlook. I have a 6-month outlook. It's called recession. But I've been talking about that for a couple months, and we're going to tip over sooner. And I don't care. See, this is the thing. We look fine, and we've already talked about the definition not officially being two, and I completely agree because a lot of people have that wrong. However, you tip into 2 consecutive quarters of negative GDP growth, it's not good. Whether you label it that or not, it's not good. The prices, ignoring energy, ignoring food, ignoring rent and housing prices does not make it better for the average American. Looking at a spreadsheet and saying, because you can make numbers look anything, literally. I can make numbers. Give me a spreadsheet. What do you want the numbers to look like? Okay, you can make numbers, but once you start trusting those numbers that are full of absolute crap, it doesn't matter what your numbers say. Go take a look at what's going on. See, the funny thing is, I'm looking. All right, Ford. The company has begun cost-cutting efforts. All these companies are still lowering guidance. Guess what? Let's rally them. Like Microsoft, with their cash flow stuff, they changed their depreciation from 4 to 6 years. And people are like, that's a great thing. Because look at all their balance sheet numbers. So let's ramp it up 12%. They're actually telling you, see, it's literally still buy everything. All right, everything's guiding lower. Let's buy it.
So this is the start of what Mike and I have been talking about. As if they don't let this particular bout of inflation run its course, fight it with what they can. But even Jerome Powell said in the press conference today, a lot of our tools don't address a lot of the root causes of this particular bout of inflation. That's right. You can't raise rates and take away the stimulus checks that have already been given a year ago. But anyway, if they don't actually stick to it and fight inflation and let the recession happen and let it either be shallow and long or sharp and deep or whatever it's going to be, if they come to the rescue, the next one will be
brutal.
It might be the end of it. It'll be brutal. It'll be in the history books as worse than the Depression, worse than the Great Depression, because they will have no tools, no bullets. They'll have nothing to fight it.
Yep. And
anyway, you guys, our 401ks all look better, so we're good.
Yeah, but your 401k doesn't,
I know. I'm just.
But this is sort of what happened in the 70s with, all right, you had inflation really ramp up in the early 70s, in the 74, and then they thought they got it under control, and then it ripped everybody's friggin' head off going into the late 70s, early 80s, and then they had to take it seriously, and that was not pleasant.
Yep.
I think we're going to see if they go down this path, we're going to see, they're going to celebrate PCE going down to 4% and everything. Oh, we can ease up. You'll get a little reprieve, and then the next one's just going to rip everybody's friggin' head off.
Yep.
Oh.
You better.
Oh well. What? Oh, but hold on. Sterling's got a question. Bob, what the actual hell are G7 countries thinking they are accomplishing by putting a cap on Russian oil prices? Like that's going to do anything? How stupid are these people?
Yeah. Who was that? Sterling?
Yeah.
They're not actually able to physically put a cap on prices. They're going to try and use the mechanism of the insurance companies. Barges have to be insured when the oil is shipped. And so a lot of those companies are European based. So they're going to try and use that by telling the European companies they can't insure cargoes over a certain price. I predicted when we talked about this a couple of weeks ago that Russia would just self-insure them, and they've already said that. So you're right. When they say they're going to put a cap on it, they're not going to be able to. So that's it. Plus, let's think about this for a second. What's the cap going to be? I mean, a barrel of crude oil, where did crude oil go after the Fed meeting? It was up about 3% when I last looked at it.
It was.
Crude oil is at about
finished the day up
98.20.
3.44%.
Okay, so crude oil is up at about 98.25. Let's walk through this for a second, then I'll let you go, Mike. So if you put up a crude oil chart and you go to the approximate time when the troop buildups happened, which was somewhere around, the troop buildup started to be publicized somewhere around, say, December or so of last year. Not much, but so crude oil was about $70 a barrel at that time, so maybe a little bit less than that. And then you go all the way back to, let's say, May or so, and we were at 40 or 50. Right? So what are you capping it at? The sanctions started right after the invasion, which shot crude oil up to about 130, and then the sanctions started. So Russia went from selling crude oil from about $50 to $70 a barrel up to about 100, 110. Where are you capping it? It's at 70. So what are you doing? You telling them you can't insure barges of crude oil from Russia unless they're under $25? Is that what you're going to say? A barrel? Russia's just going to go, well, you know what? You can go to the open market and pay 98 if you want on WTI, or about 101 on Brent, or you can buy it from us for 70 and we'll insure it. Nothing they can do, man. Absolutely nothing they can do with a product going directly to India or directly to China. Nothing they can do.
Bob, are we going in the wrong direction? Most tech is down to December 2019 levels, exception megacap. Megacap has the growth and they may not go down. Your thoughts?
That's an interesting question. I don't think the overall selling is done on megacap either. I mean, small cap tech is the most sensitive to interest rates. So I suspect if you separated out small cap tech to large cap tech, you would see the small cap tech relatively performed well today. But yeah, big cap tech is still going to be affected by cap tech to large cap tech. What the fuck? It's still going to be affected by wage increases that are not going to go away, loss of productivity by work from home and extra time off that was given post-pandemic, and supply chain disruptions. So yeah, I agree with you. I think I'm agreeing with you. Mega cap tech has profits. So if you want to buy tech and you're still worried, you buy mega cap tech. You don't buy small cap tech. But I think small cap tech probably did well today, but I didn't look.
Well, oh boy, hold on. Yeah, I took care of some comments.
I don't know why you keep kicking the naked girl HD out of here, Mike.
I'm just forwarding them to you.
So when I'm not on next week, it's because tomorrow, it's because my computer blew up because of fucking viruses.
No, I just had to report them. I'm tired of that crap. Naked is more reliable than JPAL. There we go. All right, you win. You win the gold star, Rich.
Did anyone see that robot Joe Biden video?
No, I didn't.
Okay, I got to send you that, but I don't know if you can see that. Mike, I'm going to forward you a text. There was a video where Joe Biden, I'm sorry, I'm forwarding you a tweet, but I'll try and find the actual video for you so you can look at it. There was actually a video of Joe Biden saying something. I don't even remember what he was addressing. I think a recession. He didn't blink. He didn't blink at all through the whole video. And if you see the tweet that I just texted you, somebody compared the pictures of his face. They just took two stills of his face. And this particular one here, which I don't think you'll be able to see on the live stream, but It was so weird, man. His eyes were like that the whole time.
Well, I'll have to
Somebody
take
said
a look
there
at
was
that.
like a Joe Biden AI clone. I don't know what the hell it was. It was funny though.
So, I'm not
All
gonna.
right, stop it, Eric. I mean, Waka Waka. By the way, Wavy, so Wavy says the video is a deep fake. Is the actual video the video didn't happen, or it was made to look like he was weird like that? Deep fake is kind of like a blanket term for a lot of things. Like it may not have happened in the first place. There may not have actually been this speech. I don't know. By the way, Wavy said earlier that the bottom third I agree with. I agree with that too, Wavy. It's not important to the greater conversation. I just want to tell Wavy I agree with him.
They're saying it was video edited. I didn't even see it, so I'll have to take a look at it. But the White House spokesperson says we are not in a recession or a pre-recession period right now. We're not even in pre-recession.
Period.
Huh?
We're always in a pre-recession period. Always.
It's the stupidest.
It's literally what we're always is in a pre-recession period.
Because there's always could be a recession coming up.
Who was that comedian? He committed suicide a long time ago, long hair. I always forget his name. Anyway, he had a joke where he said, somebody told me to show him a picture of me when I was younger. Every picture of you is a picture of you when you were younger. Someone in here will know his name. I don't remember his name right now.
Oh, boy. All right.
All right. Anything else for me? I'm going.
I'm not seeing anything.
All right, guys. I'll see you tomorrow afternoon. Tomorrow afternoon, I'm going to be on here for a very short period of time.
Yeah, what? That's what Fed Dudley says. The Fed will hike much further than the markets expect.
Yeah.
Now are they going to come out afterwards and start stressing, yeah, you got to take us more seriously?
Mitch Hedberg, Mike. That was his name, Mitch Hedberg.
Okay.
You watch some old videos of him, you'll die. It's hysterical.
I will do that. Well, it's pretty much, hey, Bob, do you believe that the Fed doesn't go with the GDP? Didn't they pretty much say that?
Yeah, they said that you can have that. They actually reference specific periods, which I was going to write it down, look it up, but I didn't. I figured they're probably not lying about the period they referenced. But they said you have times where GDP drops negative because of various factors. One of them was a mistake. He said it was just like a extended seasonals that should have been taken out in the calculations. So just whatever. Anyway, he said, yeah, you can have all kinds of mix-ups and still have a negative GDP. So it isn't important to him. And by the way, that's not part of their mandate. So don't blame them for that.
Well, again, he stressed that they don't determine when a recession is. They have nothing to do with that. It's determined separate from them, which is true. But they felt needs.
By the way, really quick, Stranger Things is being edited retroactively by Netflix, just so you guys know.
For what?
I don't know. I haven't read the story yet.
Can we be done with this?
Something offended somebody, so they're editing it retroactively.
Can we be done with this decade?
Please.
Can we just jump to 2030? Like take a time machine forward? Because I'm done. Okay. Bob, right, Saudi guys. Set to hike oil price to record highs. Do you think oil could hit 150?
I do. That's actually my target. I got a target of about 150 for crude oil because we're going to come out of the summer driving season and then we don't have to, worry about the seasonality of it anymore. But this particular, especially if there's not going to be. This particular administration is not friendly to crude, no matter what they say in the news. And if we're not going into a recession, then demand's going to pick back up. So.
And if we have a single hurricane that hits the Gulf, watch out.
All right, I got to go. I'm getting into politics on Twitter, and I'm going to start saying stuff I don't want to say.
Okay.
All right. See you tomorrow, guys.
All right. All right, everybody. Just me. So, stocks all-time high now, and also crypto, no. Well, I mean, we could continue a rally. All-time highs are a long way off. seeing just as I got asked so many times today or told, see the bottom's in, the bottom's in, the bottom's in. You got to buy now. Even people on the street, the bottom's in. You're putting all our cash to work. Again, even if we're slightly wrong on the timing, the bottom's in. It's not in. I don't have a long-term buy yet. And I go off of statistical probabilities. So, and just the fact that everybody is still bullish. Where's our friend, Tom Stock? I'm surprised he's not on here today saying stocks always go up. And naked person, leave me alone, naked person. Naked people, leave me alone. Oh. No, I'm tired of you interrupting my damn stream. At 4,400, will you say the bottom isn't? I will say the bottom's in if I get a long-term buy signal, and a long-term buy signal depends on a lot of things. 4,400? No. Well, that's above the 62 and a half. That means, but that doesn't mean we have to go to new highs. Remember, bottom is in means we have to break out above 4,800 essentially. Okay. Also, oh, I can't see the comments. Ugh. So let's just go through the markets. Again, cycle's still heading down on the daily, even with this big rally today, but still at the top on the weekly. So we're still against some key areas. I'll give you the next target should we continue the rally. The love fest with the markets tomorrow. Remember, tomorrow and Friday are going to be critical days. It's not just tomorrow because we could go back to and erase this all within the next couple days. Although, again, I can't get overly bearish until my first thing is back below 3,900. You see here the little projections we did today with the harmonics. We paused here at the cluster, and then we broke out. We had 40, 42. And hitting that pretty much spot on. Overnight, it's a breakdown below 4,014 roughly for the pullback to the prior breakout zone. The prior breakout zone is now at 4,000. The prior breakout zone is at 4,000 on that. Let's come up with the next levels. Even though we don't have a strong pausing bar, we still have to go off this most recent swing. And these are done. So the next levels, we have 40.53 to 40.59 and 40.76. By the way, the close again back above the 62.5. So that's why even if we have a pullback, would not be statistically surprised to see 40.31 to 42.02. Would not be statistically surprised, and that would even return to the major breakdown zone from May and March, and these highs from June. So that would not shock me based off this current market environment. Again, I can't get overly bearish until we break back down below 39.04. So that's where we sit. Am I setting up for a rollover? I know they're far from triggering, but looks possible double top on the 4 hour on the Qs. Hold on. Let me get through some of these, and then we'll look at it. You see, this is a potential 2-top. Why isn't it double top? Because this is not even a clear move. You got way too many stopping points. So, again, I can start getting more bearish below 12,141. Other than that, what's interesting is the Nasdaq retesting these high areas, but not breaking to substantially new highs. Let me just clear up some levels here now. So the area's going to key off of, again, tonight we got a sort of a broader support zone in the Nasdaq about 12,526 to 12,496. That's what I'm watching for the pullback area. With that, breakout areas now above. And again, we've nearly hit that 87.5. Remember, close back above the 62.5 here. Got the 3-bar pullback and nearly hit the 87.5. It virtually hit it, but we're working off true numbers, so we still have a little more potential upside on that. And if we break through that, minor 12,776, and then I'm watching 12,861 to 12,896 because anywhere in here is a potentially short-term top. If we get through that, next target is 13,205. Dow coming up just shy of those clusters, spiking through. But these lower closes were interesting with the pullback into the close. But the key area, Dow is just the Dow has been really tough with levels lately. About 32,053 to 32,100 is my support zone. Still got a little much here. And by the way, the Dow did not close above the 62.5 yet. So that's where we sit on the Dow and can't get more bearish on the Dow until we break back below about 31,475. Russell coming up, closing pretty much at the 75% harmonic, but watching next targets 1866 and 1885 statistic area. Can't get bearish until we get below 773. Sound like a broken record. The DAX, little rotation up, triggered an aggressive %B buy signal, so watching for the higher price action in the DAX. Again, this potential double here is now a triple, so you can't use these targets. So on any break, really at this point below roughly 119.20, we'll watch for a slightly bigger pullback, but this is confirming but not yet triggering the inverse head and shoulders. And we may get a redraw on the neckline, and then we'll need a close above that new neckline. Crude, really at this point, we start getting above about $100 and about 65 cents. I'm getting short-term bullish. Order breakdown below 94. In here, it's just short-term trading. In that, we continued to get the slightly pullback, but on a nice little bounce off this 838 level. So we're going to still watch if that breaks. Going to keep going back to the pullback in the daily rotation zone, other than watching for a little pause in here. Gold was tried to break up here, but cycles are at the top, so I'm still watching for another potential rollover play and a stronger bottoming formation. We may get a really sloppy inverse head and shoulders there, but it's too early on that. Silver, again, this is more mixed, so I'm watching for a break above about 1950. Let's just get through some of this. Dollar still caught in the range. We've tried to get a little break going earlier, but then selling off into the Fed rate hike. Decision VIX. VIX, nice rolling down day. By the way, this could be a, let's see if this qualifies. I looked at this earlier, now I just forgot. I had too many things on my mind. Yeah, potential double. So we'll be watching for a potential double. Let's just see if the target's on the conservative side. They actually work on the aggressive side also, roughly. So that's the only thing that will start tipping me into real bearish mode if we trigger that double. Bitcoin. Rotation back up. Again, this was just buy everything that wasn't nailed down. Cycles at the bottom. So now I'm still watching for a continued move to this next, back to 24,000 and then 25, roughly 24,975 with cycles at the bottom on the daily and not yet topping on the weekly. So we could get one more push higher. against the weekly rotation zone. Tesla, rotating up off the day, 3-bar pullback into the rotation zone, and then the rotation back up. Let's see here. No %B buy signal there. We do have a potential double top. I'll just put that on with the aggressive targets for right now because we don't know if this is in this side's in. But if we get follow through tomorrow, again, minor 837. More significant is 865 on the next run up. If you want the minor levels, use your reverse harmonics. And then if we continue beyond there with a more broad market rally that continues, I'd be targeting the 200. The spiders and the Qs. The spiders and the Qs still on the next follow-through move. We are above the 62.5, so statistically you should still target 410. Can't get bearish until below 389.60 area. And the next minor cluster target is 403.50 and then 407.46 for the breakdown zone and the harmonic. Qs. Again, it looks like this is actually going to be 2 tops again instead of a double top because of the choppy nature of this move. But the key area again would be the breakdown zone below the 26th of July lows. And that would just be using targets other than the doubles. Let me pull this off real quick. Again, nearly hitting the 87.5, so we still have a little more statistical upside coming off the harmonic level again, virtually. But I'll be watching for a slight continued push, and then if we get through that, the 312.97 area. What else? I don't know if GDP will be that big a market mover. I think it could get shrugged off again. I think it's already baked. It's coming in negative. I'm staying with a slight bullish tendency until I get a more bearish signal, Sashi. Oh, great. More. Twitter says Musk is holding up discovery process in case. This is just gonna, yeah, it's. You think it's going to be easy going with Elon? It's going to be a nightmare. And it's the 4-hour confirmed double bottom on the 30-year valid. The third target is in the wick. Let's get to, hold on, ZB. Sorry, I'm running out of let me clean this chart up a bit. Is the 4-hour double are you talking the 30-year yield? Oh, I didn't see that because the double top is off. So all right, you want the yield. Sorry about that. I didn't see the Y. My bad. That's confirmed. You really should measure it on the other. It's roughly, oh boy. That's super. Whew. That's super close. That's confirmed. I gotta take a look at that again with the. Yep, confirmed, not triggered. It's still valid. Yeah, it doesn't matter that the third target's in the wick. You'll want to use the first and second targets off that. You're welcome, Amit. CPI, rate hike, and earnings have we only managed to kind of slow down this rally. We'll take a black swan to retest the lows. And remember, at this point, let me just review a couple other things that I didn't get to before we wanted to, I wanted to bring on Bob. But we don't need to go through the economic calendar for today, although housing was a pretty big miss. Tomorrow, as the people have been talking about, hour before the open, you got GDP. Don't ignore initial jobless claims, though, and then you got the PCE numbers coming out tomorrow. So that's going to get interesting to see how much that drops. So keep that in mind. Don't ignore real consumer spending. And later on, after the open, again, you have Kansas City Fed manufacturing. We'll see if that's still in contraction. By the way, where's that earnings? By the way, also don't ignore, not before the open, not much. Be interesting to see, because Visa was up. Well, interesting to see how MasterCard does. But after the close, do not remember you got Apple and Amazon. Apple and Amazon. Also remember the thing that was killer with data dependence for the bearish thing was, remember, we don't have anything. I keep minimizing stuff. We don't have anything now till September 21st with the next hike. I mean, the next rate meeting. There's a ton of data that can come out between now and then. And it's summer markets. And everything that's getting a beat is on adjusted earnings. See, when you start doing everything off adjusted earnings, it gets very interesting also. So it's going to be keep pumping the crap until something, it could take a black swan or some unexpected event to, if we get through the next couple days with the bull mode still intact, even with the pullback, then I'm really going to be focused on the continued rally until it doesn't. Thank you, Sterling, for putting that. Yeah, could everyone do that? Leave a quick comment after this one's over. Again, we're pushing for that 5K subscribers. And we're trying to give decent information instead of just, the talking head crap that's out there. Again, everything's going to be tactical trading. If I get a longer term buy the dip's been over. Now do we get the follow through with the move? So statistically, we should see a retest of the highs. Statistically, we should see a retest of the highs, high area, from back in the beginning of June, and the S&P, Nasdaq, and Russell. The Dow is not confirmed, and the Nasdaq's almost there. Beyond there, then it would be a breakout play. But if you're looking for a long-term buy, don't have one. Don't have a long-term buy. And also, see, this is what drives me friggin' crazy. Everybody wants to know, and this is why the lows, from my perspective, A, I don't have a long-term buy. B, you can get bear market rallies that go on a lot longer than you think. Could we easily return to the 200-day in the Nasdaq? Yeah. And then that would be 14,200. And then everybody would be saying the low's in. But remember. This is where I don't want you to get faked out. You can get some massive rallies. In a bear market. Massive. Big. Before rollovers. So keep that in mind. With that, I'm going to call it a day. I am tired. It's been a long day. The press conference wore me out. So we shall see. Generally, well, it's an inverse correlation. because a strong dollar especially can really beat up long-term earnings in companies. So the longer the dollar stays strong, it can have especially with multinational corporations. Okay? So it's actually a strong dollar is a leading indicator of potential earnings weakness. With that, I will see everybody back tomorrow morning. We will have the GDP information in, and we'll also see how the markets reacted to help fine tune it. With that, talk to everyone later. Please come back as Sterling requested and leave some comments and some likes on the videos, and I'll talk to everybody later. Bye.